Hello and welcome to Crux Investor. We caught up with Keith Coughlan this morning. He's the executive chairman at European Metals. They've got a lithium project in the Czech Republic. And we talked through the recent EIA submission, ESG in general, the macro thematic for lithium and EV in Europe. A lot of money being bandied around through grants and funds. And we talk about how they insert themselves into that and how this thing gets funded, because they're moving towards a DFS decision in Q1 of next year. And if you want our thoughts on the conversation, you can find that at cruxinvestor.com. And we'd love your feedback too. So do give us a like, leave your thoughts below. And if you want to see precisely what we talked about, do take a look in the description below. Keith, how are you doing, sir?
Very well, thanks, Matt. How are you?
Good to have you back on. How have you been? How are things in Perth? All good?
Perth's still good. Still not a bad place to be, given the world that we currently live in. The isolation is quite an advantage at the moment, but I feel a little stuck here.
No, you just refer to it as, we can refer to it as splendid isolation. I'm getting used to it. I'm liking it. Hey, well, we caught up with you the beginning of March, and there's a few things that you've been up to that we want to talk about. But before we do, why don't you give us people new to this story, give them a 1-minute overview of the business, and I'll pick it up from there.
Sure, no problem. So European Metals is developing the Cinovec Lithium project. It's by far the largest hard rock lithium resource in Europe. We're at a definitive feasibility study stage, with that due to be completed early next year, moving to final investment decision. We've completed 2 PFSs on the project. It's a very large project, an MPV, according to the last PFS, $1.1 billion, IRR post-tax 29%. And with the ability to produce 25,000 tonnes of battery-grade lithium hydroxide a year for the market that is growing the fastest in the world, the European lithium market.
Fantastic. Okay, I'm going to refer people to the link below, which will go to the previous interview that we did, where we got into business plan, strategy, people, team, etc. So you can go there and look at that. I don't need to go over that today. I want to talk about some of the stuff that you've been up to. But before we do, let's talk about the lithium market at the moment. It kind of seems to be just having had a spurt at the beginning of the year. It seems to have sort of settled down, having a bit of a breather at the moment.
I agree. If you're referring to the lithium equities market, the lithium market itself, the underlying market is still very strong, and lithium price keeps going up. Supply-demand equation there is very much in favour of the producers. But yes, you're right. The demand for lithium equities is having a little bit of a rest. Probably no great surprise. There was a very, very strong move in the sector from Tesla battery day right through till about the end of February. There were some billions of dollars raised in the sector in that period of time, and it's just natural that takes a bit of steam out of the sector and takes a little while to digest that sort of money. Okay,
well, I'm going to take advantage of your experience in the past. You've traded a bit, these things. Do you think that some of the uranium equities have got ahead of themselves? Is that hence the reason?
Absolutely, yeah.
Because you're right. Whatever lithium product you're looking at, the trend is just up. It keeps moving up. You'd normally expect lithium equities to follow that, but are we starting to sort of work out who the players are and the players aren't in terms of the equities?
That's generally what happens, isn't it? To coin a cliche, the rising tide lifts all boats. But then when the dust settles, people get a little more selective. Everything tends to drift back, and then the good ones, tend to show their true colours and move ahead again.
I think it's the thematic that's running through all of our conversations at the moment, no matter what the commodity is. And can we just talk about that a little bit? Because we talk about hard rock, and we've talked about some of the newer technologies, the DLE, even the brines I'll throw in there. Are we starting to see a sort of bifurcation in terms of where people are gravitating towards in terms of their investments, do you think?
I think when things get a little toppy in the sector, people tend to run to what they know best. What the market understands best, or perhaps is best, most comfortable with in the lithium market is hard rock, spodumene concentrate. It's kind of the mainstay. Brines come and go in favour a little, I think. But it's no surprise that I think the gains we've seen and the M&A activity that we've seen in the last couple of months has been predominantly in that spodumene con sector. So I don't think there's any surprise in that. if things get a little toppy, it's the slightly different things that tend to suffer a little more or earlier.
Right, but there's room for them.
Absolutely. If you look at the supply-demand equation for lithium, it's increasing dramatically on the demand side, and the supply side can't possibly react quickly enough. We saw Albemarle make an announcement a week or two ago that they're effectively saying that, right now they're out of lithium. And I think that's echoed across most of the majors without them necessarily making those sort of statements. And we're also seeing it in the activity of discussions with potential off-takers. I think they've exhausted what they can buy from the majors, from the incumbent producers. And I think the next stage is to move on to the developing companies and seeing what can be done there.
Because do you expect there to be more M&A? We've seen a few companies being picked up at different whatever you think the valuations, but there's M&A is definitely part of the makeup at the moment. Can we continue to see more?
I think without any doubt we'll see continued M&A activity in the lithium space.
I mean, so when you've got someone as large as that going, hey, we've run out of lithium, or we can't see line of sight to lithium, that's slightly worrying.
We've been saying for some time about the supply-demand equation, and it is taking a little while to sink in. But if we look at just Europe, for example, the numbers that are generally quoted about demand in Europe now for 2030 is 300,000 tonnes. Now that's a lot of lithium, comparative to what's made in the world. It's a hell of a lot of lithium, and obviously within Europe, there is no current supply. No one produces battery-grade lithium materials in Europe at all currently, period. And the EU has this statement that they want to be 80% self-sufficient in lithium production by 2025, which isn't going to happen. But the fact is that it's a strong aspirational statement. I think it's certainly indicative of what the EU wants to happen, but I think that's being echoed by other regions, other countries, etc., in regards to trying to secure supply going forward. Very interesting statement, I thought, out of Biden the last day or two about wanting to outsource, lithium metals from other countries and not so much from within the US. That's a very interesting statement. But I'm not sure from where. I'm not sure who has the sort of resources, the sort of reserves that the US would require if it got fully embraced in the EV future. It's a very, very big market.
Well, it's a very, very big statement from two fronts. It's government getting involved in commercial business. I mean, we've seen this in other commodities where, people hope that the US government steps in because it seems like cheap money. So, do you expect Biden to actually do something about that in terms of putting some money up to it? And secondly, it's big because he's saying, this kind of critical minerals component of the narrative that's going on over there at the moment is about, well, can we be self-sustaining? Do we put up walls and say, let's do this ourselves where we can, or do we need to go and find a bunch of friends? But all the friends are doing the same thing. They're finding new partnerships. We talk about European ecosystems, Asian ecosystems, Chinese ecosystems. This stuff is becoming harder to get, more expensive to get, and the demand is going through the roof. So is that reasonable for the US to expect that they can go and make some friends and feed into their system?
I'm not sure. I think it's contrary to what we've seen in the last 12 months globally. One of the reactions to the COVID crisis was to contract to local supply chains where possible. It highlighted, amongst a lot of other things, it highlighted the dangers in relying on global supply chains. So when you have that coupled with, some anti-China sentiment globally, and bearing in mind China still controls 80+% of battery-grade lithium chemicals today, you can see why someone like the EU has said, no, we want to be self-sufficient as much as possible. So I think President Biden's statements are quite contrary to that sort of sentiment. And I think it's in an effort to appease the environmentalists within the US. But all you're really doing is shifting the problem somewhere else.
You're shifting You're shifting the problem somewhere else. It just became a little bit more expensive. And, for all the talk of ESG and green energy and so forth, you're just making your carbon footprint just that little bit bigger if you're schlepping commodities around the world. It's a kind of mixed messages.
And for lithium, that's already an issue. Obviously most of the world's lithium's now made in the form of spodumene concentrate down here in Western Australia, but the majority of it is then shipped 6,000 or so kilometres to China for production. So, you have to add to the CO2 footprint by doing that, particularly when you consider that 94% of everything that's shipped is waste.
Well, let's talk about you guys in the context of Europe. Okay, so we've seen a lot of European countries, obviously as part of the EU, but also companies coming together with joint ventures to build out this EV ecosystem. The automotive OEM guys are plowing hundreds of billions of dollars into that. The EU has put up huge funds and made money available cheaply to further that. Are you seeing the same sort of conversation that you were just talking about with Biden happening in Europe? Are they closing up shop and saying, well, let's truly try and make this a self-sufficient environment?
I think that the aspiration is definitely there to do that, but it's a big ask. If you look at, just talking from lithium's perspective for the moment, if you look at all of the known resources of lithium in the EU or even in Europe, if you add in Rio's project in Europe but not in the EU, if they all came into production on time, at nameplate capacity, there's still not enough lithium in all of those projects to satisfy the demand that we're seeing emerging in the EU. So there does need to be a two-phase solution for the EU to be able to deliver the number of EVs that are on the cards to be delivered in the region.
And what about this? Again, you mentioned a second ago in the context of Biden's slightly contrary view. You've got people opposed to mining in the States. Are you seeing that in Europe? So Europeans are talking the language of, we need to be self-sufficient. There's the demand far outstrips supply, even if everyone operates at nameplate capacity and gets into production on time, and they can access the money cheaply. Are they making it easy for mining companies to actually get on and with their business?
Not really, not necessarily. There are still challenges, and we saw within the last few weeks, we saw one particular company, lose a permit in Spain. A lithium, a hopeful lithium production company. So it's not any given that these projects will, in the mainstream, get the permits that they require to get up and running. The EU is definitely supportive of it happening, but that's not a carte blanche. The way that the region operates, it's not just an automatic rubber stamp because the EU is supportive or the EU sees the need to develop, the region's own critical raw materials. You still need to go through the process, and Europe is one of the greenest places in the world, has been for some time, and mining per se has been a dirty word for some time in that part of the world.
Well, it's because I guess the density of the population is a factor.
Population density, all those sorts of things.
Yeah.
But, they have certainly, I think, come to a greater realisation that simply buying raw materials from other parts of the world doesn't actually solve the problem from a global point of view.
No.
It just moves it.
Exactly. You're outsourcing the problem. Not NIMBYs, isn't it? Not my backyard. So with regards to that, then, we know the company you're talking about. We've interviewed them, and that was a lot of local opposition. And I guess that leads us on nicely to ESG. And we will talk about your company, but I'm intrigued by your thinking and your knowledge of what's going on in Europe. The ESG component is critical, but it's multifaceted. There's so many aspects to it. In fact, there's so many aspects to it. It makes it difficult for junior companies to be able to allocate the time and resources to it, financial and otherwise. So sometimes processes get ignored or cut off or delayed. and that impacts them. So again, it's answering a question, put to us a few months ago now by people going, this ESG stuff's just a waste of time. Just get on with the mining. We need the resources, and it doesn't quite work like that anymore.
No, there's always going to be both sides competing, and all you can really do is to, be the best possible ESG corporate citizen that you can be. What we are now seeing an industry emerge, an ESG management, reporting, consulting industry emerge because this is becoming such a big issue. And the advantage of that industry emerging is that you start to get yardsticks, measurement systems that are comparative. So you can actually start to assess one project versus another because the measurement criteria are being standardized, and it's being done by independent global consultants. So from that point of view, that is positive. It's certainly positive for you if you have a project that ticks the ESG boxes. Happily, we believe that we have. But it certainly means not all projects are alike. Now, and then if you kick that down to the next stage, so the people who buy our lithium, so let's say it's an automotive company that buys our lithium and puts it into their electric vehicles, when they're assessed on the CO2 footprint of that vehicle, it goes all the way back to where they bought their lithium, where they bought this, where they bought that. So no one can operate in isolation anymore. It's the whole supply chain that's being interrogated. And, so that's another reason why the EU, for example, says, well, we want to develop our own critical raw materials as much as possible, because just from the point of view of distance, what we spoke about earlier, the CO2 impact of shipping vast distances, it just improves the overall emissions of that end product, of that end vehicle.
Yeah, it's interesting. There's always going to be groups that don't, whatever you do, don't want to see it in their backyards. Okay, and they're very vociferous about that, and they won't change their mind. Their minds will not be changed, despite needing the materials for their phones, their cars, their houses, whatever, to come out of the ground. And I think, do you think that this kind of new ESG environment we're seeing with consultants justifying certain behaviors, etc., is that ever going to be able to appease those people, or is it just it's of the moment and it's something that we've got to do, but the reality is we're going to be digging that stuff out of the ground because we're going to need it. That's the truth, isn't it?
I think there'll always be a minority who won't be appeased, whatever solution you come up with. But I think part of the benefit of globalization from this specific perspective is that people do begin to understand that, it's just as bad buying this from, a country in Africa where we don't much care about, what happens or didn't previously. It is actually just as big a problem as if we're producing it ourselves. So we just simply need to produce it ourselves in the absolute best possible way that we can, and not create more problems than we solve.
Okay, so talking of which, you've submitted your EIA. Good news.
Yes. We have a critical path item, on the way to final mining permit. Submitting the EIA is the culmination of a couple of years of work, with your baseline studies and the like, our own baseline studies, but also, studies from independent groups as well. And as you say, that Europe is an area in which environmental issues are heavily regulated and followed. And so, happily, the independent studies that we've submitted along with the EIA are all positive. We do benefit from the fact that we are re-entering a historic underground mine. So, there's no doubt that has a lower impact on the environment, a lower impact on the population than breaking new ground or, trying to dig an open pit in the middle of Europe. Obviously down here in Western Australia with our population density and what have you, going and digging an open pit is what we do, but, it's not something that's going to happen in Europe. So, we benefit on all fronts from the fact that it's underground, so there's no visual pollution at surface, there's no dust, noise, what have you. all of the front end will be underground, and then we, will slurry pipe the concentrate to the processing plant. So, not even having trucks driving through the local village. And that, you have to go down to that level of detail in considering all of your ESG responsibilities.
Were there any kind of nuances to the EIA in the Czech Republic?
No, not really. Not really. It's, there are a couple of specific, things we had to consider, without boring you with too much detail. There's a particular bird, the black grouse, we had to make special consideration there, all those sorts of things. So that was particular to our project, but I'm sure all projects have their own, nuances like that.
Yeah, it's interesting. Greater crested newt. That used to be the one around here when we're building. Okay, and the other thing that's happened is you've done some cycle tests as well. What's that thrown up? Nothing unusual.
No, just all good positive news. So obviously, the DFS is there to prove, what we postulated in the PFS, but to bring it to a narrower, band of or a higher band of certainty. We had scheduled 6 lock cycle tests to finally nail the process flow sheet. We did that in 4 and, cancelled the last 2 tests. So that was all very positive. We, all of these little tweaks that we are working on, or that we have worked on, over the last couple of years, in themselves, each individual one may not seem like it's that important, to increase your overall lithium recovery by a percentage or 2. But at the end of the day, it all just adds up to a better project economically. Better recoveries mean better profitability. It also means you dig up less rock to create more lithium or more lithium hydroxide. So it also goes to your carbon footprint and your ESG credentials as well. So it's comforting, and it's very pleasing to see what, my technical team, certainly not me, but what my technical team have been working so hard on for the last couple of years, to see it come through, with flying colours is very pleasing. So
when you say, right, we did 4 lock cycle tests, but we cancelled 2 others. I mean, what's the decision? That you got enough information, or you didn't want to spend the money?
Yes, yeah.
Basically, it gave you the answers you needed.
Oh, look, it's that incrementally they're not that expensive in each one, but it's a matter of proving the flow sheet. And when you've proven it, you've proven it. So that, there's no need to carry on. We thought it would take 6 tests. It took 4.
Okay, fine. And then, so working towards this DFS, and you said early next year, Q1, Q2 next year, and some sort of FID on
Q1,
that.
Yeah.
Q1 you're going for. Okay, fantastic. So you've got the money to be able to get to that point, I think, I remember from before.
Yes, correct.
Right, but that means between now and then, I assume you're in the market talking about how you go and raise the money to actually build this thing out, right? How's that going?
Correct. So that's a fluid discussion. It started some time ago. You start the discussions with the potential financiers very early, because they may have input to what you're doing along the way. One of the areas of cooperation with the European Union that we have via this collaborative agreement we have with the European Institute of Innovation and Technology is in them introducing us to potential financiers within Europe. And that's in a few different forms. So specifically, they are assisting us with grant applications. There's quite a bit of money, public money, that has been put aside in various grant schemes, a number of which we believe, we qualify for. And this is part of the EU's overall support of developing an electric vehicle future, a battery industry, and developing the critical raw materials. So we have one arm of the EU helping us apply to another arm of the EU for, inclusion in the grant schemes. We believe there'll also be some, if you like, soft debt through export credit finance, soft government debt, et cetera, but then also a commercial debt component, and again, the EU body is helping us in those relationships. So, those conversations are ongoing for some time. It's not like you finish your definitive feasibility and then you start talking to people about the money, because obviously, that would cause you some significant delay. So we would hope that there's not a great deal of time between the completion of the definitive feasibility study and ticking that final investment decision off and having money and beginning construction. So, we will have to raise a portion of the 500 odd million that I think the capex will be US dollars. We will have to raise a portion of that in equity. European Metals will have responsibility for half of that, and our partner chairs will have the responsibility for the other half. And those are discussions that you tend to have once you have an understanding of what the debt or non-equity component of the funding looks like.
But that's a much easier conversation to have. So we talked previously about EIT, Energy, amongst others within Europe. So is someone helping coordinate all of, because there's lots of groups and funds and grants, and so it's complicated, but the money's there, and there's a lot of paperwork. But have you got a group helping you with that, or are you finding you're navigating that yourself?
Well, within Europe, the EIT is helping us. We haven't formally appointed our debt consultants as yet, but we are in discussion. We have a short list. Okay,
and then Cinovec as well. They're party to those conversations, or are you having those discussions separately? I mean, how's that partnership look?
So Chez, Cinovec is the project
Chez.
Company.
Chez.
So Chez.
Yeah.
Yeah, no
Got
problem.
there in the end.
Look, so the feeling at this point in time, without formalising it, is that each party will contribute its own equity component, and the non-equity component, the debt plus whatever else, is at a project level.
Got it. Okay. Right. And your expectation around, because you talked about soft debt in there. Explain, what do you mean by soft debt?
Things like export credit finance, when securing material, resources, what have you, from various companies in various countries. You tend to be able to then raise debt via the export credit agencies of that particular country.
Yeah, but
so if you go and source $100 million, dollars worth of equipment out of Germany, you will get a benefit from that in discussions with the German export credit agencies.
Right, but it just want to convert it into the economics is how much cheaper is that kind of debt versus something you would have to go out and find in terms of securitization, etc.
Well, we haven't finalised what those numbers look like. So, I can't put a percentage figure on it for you, but you potentially talking, a half of the interest rate, perhaps a little less.
Right. So it's meaningful.
Yeah.
Okay.
Well, yeah, on what would probably ultimately be 350 million US of debt. A couple of percent makes a difference. I mean, most mining projects, struggling the first few years, struggling to ramp up. If you've got any delays, any problems with your commissioning and what have you, that's when it starts to bite. So if you've got, a slightly lower repayment schedule for those first few years because you've managed to secure some better finance, it can make a significant difference.
So just in terms of people looking in from outside, people perhaps not necessarily shareholders currently, but potential shareholders looking in, because you're sitting at 120 million market cap, right? And if 120 million market cap companies coming to me and asking for debt of the sorts of scale that you were talking about, normally I'd be a bit nervous. But because of this European ecosystem and the grants and the funds and this determination by the Europeans to support European-based projects, you feel that you can get this thing over the line?
Look, I think so, yes. And we're having this conversation today where, as we said right at the start, the market's a little soggy. If we were having this conversation in January, you probably wouldn't have any doubt at all that we'd be able to go and raise that money. So timing does have some impact. But, I don't think there's any doubt whatsoever that the EU is fully committed to developing a battery industry, fully committed to an electric vehicle future, and, is well aware that developing the region's own critical raw materials is very important in that equation. So I do think that we will get strong support through that avenue. And if they just simply take the lead in a portion of the financing package, it makes the rest of that package significantly easier to come by.
Okay, brilliant. Great catch up. You've got a few things to do between now and Q1. So stay in touch. Let us know how you get on with things. And certainly with regards to some of these other conversations, because again, we're seeing sort of OEMs and automotive companies also coming in there. They're also part of that equation, parts of those discussions in terms of securing forward supply, because that is a noise which is coming out a lot from the conversations that we're having. They are starting to get concerned. Yeah. Their buyers are concerned about what 2025 looks like, let alone 2030. It's interesting times.
Yeah, I agree. I agree completely with that statement. That's a sentiment that we're hearing as well.
Okay, brilliant. Well, okay, we'll stay in touch and we'll speak to you soon.
Thanks, Matt. All the best. Have a good day.